Good evening, folks. I hope everyone's having a fantastic day. Let's have a quick look at the roundup of the markets, and then we'll just have a look at trend lines, how we can use trend lines to help us make decisions. Okay, firstly, we're having a look at the euro dollar. Euro dollar made a bearish engulf after testing resistance. Okay, after testing this resistance zone, it has made a big bearish engulf. So this structure becomes potentially a short. You know, we could look for a retrace. You could either just sell at market if you like. If you just trust the daily candle info, it's with trend. That's a lower low. That's a lower high. So that's a bearish engulf. And if I just look to the side, I can see, of course, it's major resistance over here. So if you like, you could probably just go short. See, the initial movement of the day was down, not like a proper move up first, which is normally what I like to see after a bearish engulf, is that the initial move of the day goes against the bearish engulf, and then you short it from there. It has initially gone down a bit, so which could suggest you might go up for the rest of the day. But still, short should be the order of the day, so you could, of course, look at shorting it, ABC over there, and we've got a couple of nice levels that we can focus on there for retraces. If it gets there, of course, it could just break down from here, so it's totally up to you. You could also use this daily low as a breakout point, of course, if you like. Okay, so definitely the bias is bearish there at the moment. On the pound has also given us a bearish engulf on the daily chart, testing this resistance area here. And the initial move of the day is up, which is a good sign. A good sign that the initial move of the day is up. So you could, if you wanted to, just also go on market, short on market, or wait for a retrace. A 1 hour chart, ABC, pulling it down. We have the 50 level over here that we could look at shorting. Of course, the supply and demand zone up there as well. Okay, so those are all potential retrace areas. Once again, she might not make it then, she might break down again. So it's up to you if you want to go at market currently, or you could also do the breakout of the current daily low. FOMC was quite hectic yesterday. I did think there might be a bullish move on the cards. I did a very nice bullish structure here on the daily. We had this level of support. We had basically almost this V-shaped structure forming with this bullish engulf testing into this bullish engulf, into this morning star. So I had a feeling it should go up yesterday, but unfortunately it didn't, and it now broke down. But now it's created a bearish engulf, and the bearish engulf is definitely in line with resistance. So if we were very keen, we could go short. This is potentially a short setup. Or you wait for the retrace and then go short. Look at the candle info and then go short. On the USD yen, had a bullish engulf yesterday on the daily. There has been an initial move down today. So you could go long at market if you like. Or you could look for a retrace, but currently on the 1 hour chart it is a bit messy. It's a bit in between on the 1 hour chart, because it's currently facing some resistance on the 1 hour chart over here. That's a lower low, that's a lower high. So it's a bit difficult to take your trigger from here. What you could maybe do is you could maybe long a breakout of these highs over here. That could be a potential aggressive entry. So although it's lining up for a short on the USD yen 1 hour chart, on the daily chart it's pretty much a good buy setup. So it's up to you, of course. If you focus only on one time frame, it might look like the dollar yen is a good sell today. But if you're looking at all the time frames or a handful of time frames, you'll see it's very much a bullish move here. Price is above the trend line. Sorry, a price is above the 50 moving average. So we definitely have a bullish market on our hands here, which makes the shorting a bit more risky. The Aussie dollar's got a nice lower low. It's retraced to a lower high. So here we've got a good 1 hour setup that is in line with our daily trend. Our daily trend is below the moving average. We have a bearish engulf here from yesterday, a little shooting star in a bearish engulf. So this area is basically resistance. Where the red line is now, that's resistance. And price is neatly retraced into the structure. Neatly retraced into the structure. So it could well break down from here. There's a couple of ways that you can trade it. You can of course trade the breakout of the low. Or we could look for some candle info here. It's still going to take a bit of time to build up. There's nothing right now. So it'll still take a bit of time to build up. Also maybe a little divergence here on the stochastic, a little lower high, something like this, where we would be able to draw a little trend line going down, maybe over here. If it does something like that there, we could also then decide to go short then. So that will take a little bit of time to build up, and you need to be able to keep an eye on the market if you'd like to trigger it that way. The dollar CAD of course is very bullish at the moment. If we look at it on the charts, the daily chart, you can see it's very much been making a higher high lately. It has then since then set up a harami, which could mean price is exhausted. Harami of course means that a candle engulfs subsequent candles, which is what we're seeing over here. All these subsequent candles have been engulfed by this candle over here, so that's what we call a harami. So it means a tired market. So basically from here we would like the market to either break lower to look for sells, or to break higher. So on the daily chart, close above or close below, and then we will look for, on the smaller time frames, for lower lows and lower highs for selling, or for higher highs and higher lows for buying. The Euro Australian dollar, that had some really nice daily candle info last night. It basically had this shooting star, and the shooting star is like a dark cloud cover as well, with this bullish candle here. And that's what we saw today. We've already seen a bit of it. It's against the trend though, so it would have been a bit of a risky trade. But initially good candle info, price has fallen. It did initially go up, which is always what we want with good candle info, is the initial move of the day to go against the good candle info, and then it fell. So that was a very nice purely candle info driven trade if you took it. Other than that, we could maybe look to long it sometime soon, because it is of course a bullish trend. We can see here it's find some support. So if we do get some nice bullish candle info, maybe a little divergence building up in this area, something similar to this low, so 2 points like this, one going higher. So if we get another little point over here going higher, just like we had this point going higher on top of that point, we could also consider going long, and that would be in line with the 4-hour trend, who's on the moving average right now, and of course the daily trend is quite high. The Euro CAD, I think it's quite a similar story. Definitely above the moving average on the daily. So definitely would be looking for buys here more than anything else. If we just have a look here, with this could all be just a retracement, a correction. We could go Fibonacci all the way down here, up and up. Here the 50 level, it's sat on top of these highs, and price is now broken through, so it might likely go to the 61.8 next. Or if it still turns around from here and we get bullish closes above on the 4-hour chart or the 1-hour chart, then we could start looking at longing it. And we would basically have the diverging effect. If that happens, we would have of course the diverging effect happening from there to there and from there to there. So we would be able to use this high point here as a little breakout point. Or if we get some nice candles building up here, we could even pick a breakout point that's going to be closer, but we first need those candles to build up, but more or less there as it is at the moment. So slightly more aggressive, or you could have your breakouts above these high points based on current price action. Of course, if it changes later, the breakout level can change as well. The pound Aussie is also quite bullish at the moment. It also potentially could be setting up very nice bearish candle info. If today ends quite strong bearish, the market would look very similar to an evening star. So there could be a bit of down action, although it would be against the trend, and we could definitely then look to long the retrace. Already it looks like it's breaking down. It's potentially already could be setting up for a buy. If I look along this trend line here, there's a bit of a trend line. So even from here, if we get a bit of divergence building up here, we could think about going long. There is a slight bit of divergence already. Yeah, from those 2 points there's divergence already. So well, it could well go up from here. Pick a breakout point, of course, as well, which would probably be right now. Let's wait for some more candle info to build up. It could be a bullish engulf here, but basically the high of this bullish engulf, or maybe the high is above here, potentially as a long trigger to go long and hopefully take that high out over there. The Kiwi Dollar, we spoke about this as well the other day on mentoring. Clearly it was testing resistance here when we chatted about it, and has subsequently gone down. And the latest candle info, of course, is a bearish engulf as well. Initial movement of the day has been against the bearish engulf, which is what we want. So it might break down again from here. Of course, we can see by these points it's tested resistance. Okay, so obviously you're there to hit a bit of support, and now it's pulling back. But in a downtrend, lower low, lower high, we would definitely bank on going short rather than anything else. So we could look at doing a breakout of the low, the daily low, or you could wait till see some nice candle info here on the 1 hour chart. If you want to go manual execution, also wait for some divergence to build up in this region on the stochastic. Something similar maybe to what we saw down here, where we definitely could see a little lower high. Okay, or even over here, where we could definitely see a lower high before the market broke down. Also really fancy candle info, nice bearish engulf with a shooting star next to it. Here could be a good trigger as well. So this one, there should be some more bear action on the cards over here. The Frankie yen, we spoke about this in the last online mentoring session as well, and this did break down as well. We would have, I think we called the trade about here, and you could have been in, still been nicely in profit. You could have put your stop above this point over there. So you should be in on that one already. So for the time being, you should be in. You would have actually probably taken your profit. So we'll see what happens on this one. Of course, the daily trend is up, so it could be, gearing up for a long at some stage, but right now, all the information is very bearish. So maybe she'll fall a bit more. Well, let's see what happens. From here, we'd rather wanted to go make a higher high for us and make a higher low to consider longing it again. Or if it breaks lower, takes these support base out down here, the support base down here, if it takes that out and makes lower lows and lower highs, continue shorting. The pound franc has made a clear lower low and is retracing to a lower high on the daily chart. It hit this resistance area where you can see all these previous lows and has immediately started rejecting, and it is below the moving average. So on the 4 hour chart, it's above the moving average, so we just need some really good candle info here, maybe some divergence to build up on the 4 hour. It would be a perfect setup because that's a lower low and that's a lower high. So definitely looking to short it here. We'll see it bounced against a 61.8, A, B, C, and there's a previous low keeping the high down. So some really nice candle info on the 1 hour chart. It's definitely against the trend because it's been making higher highs here. Only slightly though, only slightly. So a very nice divergence build up here. Okay, it's already busy building up divergence, so we just need the top to look a bit better. Maybe a double top here on the top. Some nice candle info maybe over here. It already started to give us diverging effects on the 1 hour chart. So we could definitely look at shorting it even on the 1 hour chart. And the last one that we're looking at here on the market review is very similar to the franc yen. And this is one that we, of course, shorted as well. or we looked at shorting it. We spoke about it on the last mentoring session. It definitely broke below the rising wedge, just like this one did, just like the franc did. Franc yen broke below, retraced, and then broke down. So exactly the same thing, broke the rising wedge, made a lower low, made a lower high, could have put our stop. This is actually all still from Monday. I still had this line up from our mentoring session on Monday, and as you can see, it never took that stop line out. Okay, so now we're going to have a look at some trend lines. So trend lines is just an indication that we use, something that we visually draw on the chart to give us the idea that a trend is either going to continue or that a trend might be broken. And sometimes when we notice that there's a third touch on a trend line, we could also use that as a trading opportunity. If there is a third touch on a trend line, there's a very good chance that that is going to be the move that's going to make the market go big. So right now I'm looking at the Euro USD, the 4-hour chart. Depending on what time frame you're looking at, if you want to turn around trends, normally the 4-hour or the daily chart, if you're looking to do medium or long-term trading, medium term, most likely the 4-hour chart, and if you're doing the long-term trading, mostly the daily chart. So where you would look for break of trend lines and the market making highs and lows on the other side of the trend line, we call that a crown. If the market is broken the trend line and now it's made higher highs and higher lows, or lower lows and lower highs on the other side of the trend line, that's an indication of a trend reversal. So we're seeing something similar here on the, something that could be happening here on the Euro USD 4-hour chart. We had this trend that was very strong, trend line that held for quite a few times. There's touch 1, there's touch 2, there's touch 3, and look how big it went after touch 3. Yesterday we did a bit of a long that didn't work because we thought maybe it might, just a small little one we did on the 1-hour chart. We also did the sell later. We almost had a third touch of a trend line here, over there. It almost looked very good, but then we had a full body close outside. Okay, so we went short. Okay, there was a signal sent out for that. Either go long, if that the long fails, she closes below, go short. Okay, the short worked out quite nicely in the end. We went very small with the buy because it was against the trend. It was against the daily trend. This, of course, was a with trend, so we went in quite heavy here. So that was quite a good trade. But just an idea, this is just the potential how a trend, you could use a trend. There was a potential third touch of a trend. So if it worked, it had some good candle info, it could have taken the high out. But it closed below. Okay, it closed below and price fell. Okay. So if a trend line is broken, this is how you could do it. You could have it like that. Okay, or you could wait for the market to make a lower low, lower high on the other side of the trend line. So from here, the market would have to make a lower, it's made a lower low, now retracing to a lower high would be the end, would be a crown of this trend line over here. Back to the 4-hour chart. So a market over here, it has made a higher high. It has broken a trend line. It's part of the reason we thought maybe it could be going up. It has broken a trend line, but now it's gone below the trend line again. Okay, so it made a higher high, but it did not really make a higher low on the other side of the trend line. Okay. And so here we can also see how a trend line held for a while. Then the market made a higher high, and then a higher low. And then price went up for a little bit. Okay, it wasn't a proper trend reversal, but you could have made a few pips over here. I mean, depending on where you got in, of course, but about 200 pips at least on a move like that. Here we also have a trend line that's still intact, that the market hasn't taken out. Here's the last time we had a proper crown. Two lines. You only need 2 lines to draw a trend line over. Only 2 points, but the more the merrier. Here we had lots, so it started off with these 2 points. And it just happened to carry on and stay below all these other points here. Just like on this 1-hour chart from yesterday, where we only needed 2 points. Those 2 points made up the trend, and that was potentially the third touch. So where did we have that last one? There we go. Here we had a nice 2 points. Market came, had never made a third touch. It broke through, lower low, lower high. It took I took that low out. Yeah, it took that low out, made a lower low, and it definitely made a lower high on the other side of the trend line. So this would have been a perfect little crown. Okay, going over to the pound dollar. Pound dollar 4-hour chart. We can see that the market has been very bearish. There's touch 1, touch 2. It even had a third touch yesterday. Okay, and it went quite big from there. Okay, we went quite big from there. Gathered some very nice daily candle info for long. That was unfortunately a failure. Sometimes that's why it was high risk, trading against the trend. There we had that bit of structure that it could have turned the market around, but it didn't. The trend prevailed. So it just taught us a lesson of trading with the trend. The trend prevailed. Here we could also see how it trend 1, 2 points, a third point, and a fourth point. Our price just kept below that trend line the whole time. So of course those trend lines, when price retraces to those trend lines, they can become trading opportunities. And they become trading opportunities when price breaks them. Here a little while ago we had this uptrend line over here. The market made a lower low. This was a bit of a false break with this level up there. So although that was not a lower high, it did false break with that level up there. And that was the beginning of a massive downtrend that you could have been in for a long time. Before that, we also had a nice 3 touch, 1, 2, 3 touch trend line, and it broke down. These were the initial 2 points, and that was the third touch, and the price absolutely broke down. Then eventually, of course, price did crown. It made a high and a higher low on the other side over here. And of course, that created a little uptrend for a while. Before that, we also had a little uptrend. 1 point, 2 points, 3 points. There was the third touch, and it went up. When price broke the low and made a low on the other side and made a high on the other side, that was the crown. And then she did it again, lower low, and she made this lower high over here, which of course formed the new trend line for down. And there was the third touch then subsequently for the down move. Before that, we also had a very nice little downtrend here, definitely a third touch scenario. There was the initial 2 points, and there was the third touch that went big. Since then, the market has gone and broken it, of course. After it made that lower low, it went and made a higher high and a higher low on the other side of the trend line. So that was the crowning effect over there. Aussie Dollar. Aussie Dollar's got a very strong downtrend there on the 4-hour chart. You can see how it's very much respected this trend line. Here's the first initial points. There was the third touch. There was a fourth touch, a fifth touch, a sixth touch. Okay. So basically, as long we interested in the fourth touch normally, the third touch, I mean normally. But since then, the market has respected this trend line quite hectically. So before you can start really thinking about long, the market definitely has to make a higher high, has to retrace to a higher low, and this of course would become a very good buy area. Okay, so that, of course, that's something that's still going to happen down the line, hopefully. Here we had a third touch scenario as well. Here the market at 2 points, and we could have drawn a trend line, the 2 initial points, and there was the third touch. Okay, was the biggest move out of the 3 basically. Then the market made a lower low and a lower high on the other side of this trend line over here, and subsequently created this huge downtrend that went all the way down here. Before that, the market had an uptrend here. There's the first couple of points. Then it made a third touch, fourth touch, fifth touch, sixth touch, and only after the sixth touch did it make a lower low and a lower high, breaking that trend line that eventually sent the price down. So at the end of the day, guys, price action if the market's making higher highs and higher lows, or lower lows, lower highs, is still very important. We can just use trend lines to see if the market is going to keep a trend, respect the trend, especially when it's those third touches. Or we could use trend lines to see when the market is going to break a trend, and to see if she's going to make highs and lows on the other side, or lows and highs on the other side for selling, of course. So they're very handy. They are a bit of an, it's an art and a science, obviously, you know, because they can, it depends how you look at it. But the very basic is that you only need 2 points that stick out. 2 highs or 2 lows. 2 highs to draw a downtrend line, or 2 lows to draw an uptrend line. And if there neatly happens, a third touch that happens on that line, some people just automatically long it when it gets to a third touch. They don't even look for candle info. If it fails, so what? Because your risk to reward is quite small. If they work, they've got high risk to reward ratios. So let's just have a look. Where could we have done this before? Just automatically done a third touch. For instance, just look at this 1 touch, 2 touch. So more or less, where you had an area of resistance or a supply and demand zone that more or less links up with one of these areas, just automatically put an order there, put your stop above the previous high, and then hang in as much as possible. Let's just look at the one yesterday. Okay, we waited for some candle info, so we put our stop, of course, below here. Okay, but if you were not, you could have put your stop below that one, if you were just waiting for it to touch the trend line. Okay, and of course, if you look to the side, you can see some support here. You can see all these previous highs that could act like as an area of resistance. So more or less, this area over here. Okay. Let's look at back. Where else can we have seen it? Here on this 4-hour chart, we had 1, 2. Okay. Now we could have automatically known as soon as price intersects, more or less. Okay, we could have gone ABC there. Okay, there we see we had a Fibonacci level that fell right on top of the trend line. Of course, the trend line would have been there initially, the 2 points, and we would have just expanded it into empty space to see where a Fibonacci level or a known level of support or resistance will line up to it. So when price touches, in this case, did it touch? It did touch. Yes, it did, because if I touch, yeah, it definitely did. Okay, make the trend line touch the initial 2 points, the high point, and there it did. It did touch the Fibonacci level, and it did touch the trend line. So you could have automatically put an order there. You would have had to put your stop above the previous high if you're not waiting for candle information. Okay. So very interesting, guys. Look out for them third touches. When and if they happen, they can really become good trading opportunities. And if you wanted to, if you spot them well in advance, you just need 2 prior points and a nice area of support or resistance that line up with them, and just automatically put the order there. They've got a high success rate, and because the risk to reward is pretty good, it doesn't matter if you have a few failures. If you have a few failures, the winners will outstrip it, and most importantly, the risk to reward would outstrip it. All those examples that we looked at now, the reward was a lot more than the risk. Just for instance, where can we just again find an example? Just quickly. 1, 2, this one, let's see, yeah? Okay, this was the third touch, yeah? This one didn't go too big. This one, it went, you would have, let's just imagine we put our stop above the previous high. That would have been a 45 pip stop, or a 50 pip stop. Call it a 60 pip stop for about 100 pip take profit. Okay, if you took this one over here. Okay, from that point to that point to that point, third touch. You just use a previous high to put your stop above. Okay, bang there. Over here we had touch 1. Did we have a touch 2 here? We didn't have a touch 3. We did not have a touch 3. The touch 3 collapsed. But let's imagine we had a touch 3. We would have had about a 65 pip stop. And if she went to make a higher high from there, it would have been 120 pip take profit. This one, where we had a very good a third touch. There's your 2 points. The third touch broke down quite big. We would have seen that the stop, if we put our stop above the previous high, would have been about 70 odd pips. The take profit was nearly 200 pips. So they do have good risk to reward. So as long as you can identify that it's a trend, okay, higher highs, higher lows, or lower lows, lower highs, at least 2 highs to draw your trend line over, or at least 2 lows to draw your trend line under, and you really trust the trend, you identify where the Fibonacci level is, and you take it from there. You absolutely take it from there, put your order in, and hope for the best. But if you're going to get this right, you will be right more often than you are wrong, and your winners will make a lot more pips than your losers will lose pips. So it is a good strategy to trade. Preferably look for these in the 1 hour chart or higher. 4 hour charts, they are pretty good on the 4 hour charts and on the 1 hour charts. I wouldn't really trust it on the smaller time frames. Thank you very much, everyone. I hope you have a lovely day and a lovely weekend.